So the common consensus that, in fact, the last few months have been asked the question pretty often, what is my view on the market and have we made a bottom, right? And I think this question is extremely irrelevant because it's like basically saying, do I have the ability to predict the future? And the honest answer is I don't, right? However, I have a certain view depending on what I am seeing on the ground. Now, most of the HNI investors in India, the biggest theme for them is to invest in the US. And that has been aggravated in India, primarily because mutual funds as well as global funds have come into India and said, look at US returns. They have been extremely strong in the last 10 years. You're missing out in the name of diversification. I think the nice story has been laid out, but it's important to understand the context of the story. One of the primary reasons when a market does well, when someone says view on the market is a top down view, which automatically has a function of the liquidity that is in the system. And if you look at the liquidity in the system in the US, this graph shows you the Fed balance sheet over the last 10 years, right? Roughly $1 trillion around the start of the GFC, which seems like a distant memory, to almost $8.6 trillion as we speak. Now, the magnitude of the increase is one aspect, but it's really important to understand over the last 1.5 years, we have doubled the size of the US balance sheet as a response to COVID. And we are, as an investor community, as well as a global economy, realizing that we need to normalize into a pre COVID world. And one of the aspects of normalization also means taking liquidity out of the system. Now, while we talk about interest rates and inflation, that is one aspect of the curve, which is a risk, which is what the market is pricing in today. No one is paying attention on the fact of when is Fed going to withdraw liquidity. Even today, Fed has not stopped the asset purchases. They have reduced the size of the asset purchases. So to me, this has to normalize. When is anyone's guess? Interest rate increase is one aspect of the normalization. Second is additional asset purchases has to come down. And this is a big risk that I see in the US. I personally see over the next 3 to 5 years, Fed has to normalize the balance sheet. It has to come from around $8.6 trillion today back to around $4 trillion, at least even if you go back to the pre-COVID world. It does not mean they have to do it in 3 months or 6 months or 12 months. It's a 3 to 5 year phenomenon. What that means is when you are investing in a market, it's important to pay attention to this to see what kind of liquidity is in the market. So, am I comfortable with risk in the US? I have been voicing my risk vehemently for a good part of 7 months. I am not. I still think the risk will emanate from the US. And how do we translate that into India? I'll cover that. Now, this is a chart that I just wanted to highlight around policy rate in the US as well as the CPI rate in the US, which is what the Fed, if you read the Fed commentary that comes out, Fed basically benchmarks its interest rate on the backward looking CPI rate. Now, I'm not going to comment about the flaws of this policy. This is what Fed has chosen to do, so we'll have to live with it, right? Now, obviously, you can see a stark dichotomy between the policy rate today as well as the CPI rate that has come out in the last print, which is what market experts in India have basically said. Fed has already given the path of 1.2 going to 3 by March 2023. Commodity prices are falling, as a result of which the CPI rate looks inflated. 8 might fall to 6. I think my personal view, if you ask me, I see the next two prints as north of 8, not lower than 8. And it might normalize after that. Now, equity markets are a forward-looking mechanism, so they price in a lot of this risk already, and which is what you have seen from a sell-off in the US. And I think we are in the mid to late stages of a supply-demand normalization from an interest rate perspective. While each of them have a view on when it would normalize, I think over the next 1 or 2 quarters, this should normalize. So I don't see this as a big risk as we speak. I see the liquidity aspect as a bigger risk. And once Fed starts announcing, that is when the market is going to start pricing in that risk. Right? So that's my broad view on the risk on the US and why I continue to be cautious. In fact, I continue to think volatility will emanate from the US over the course of the next 3 to 4 quarters.